Let's talk the foundations of risk management specifically for day traders. And this is by all means very, very basic. So if you're looking for some sort of complicated risk management system, you're looking in the wrong area. This is as basic and well foundational as it gets. And also it shows why risk management in the first place is actually needed, because that's what I want to do is break down the term risk and then management. And this all comes from a little conversation that happened on YouTube, and it reveals something that has come across and come up time and time again over the years that I've had this channel. So I mean, this is kind of rehashed content, but I'm just trying to put another angle on it because people continually get mixed up, and I can see why, because nobody's wrong. But again, it illustrates why risk management is the key. So let's get to this interaction. So someone asks, that 67 you risk, is that $670 or $6,700? Somebody here is kind enough to reply, multiply any of his number by 100. So 6,700. Just very quickly, the multiply by 100 is something specific to options trading, which is outside of the scope of this video, but I did want to make that clear that, wait, multiply by 100, he's talking about options, but like I said, it doesn't need to go beyond that. And then this person's conclusion was, that's quite the risk. So in this person's mind, 6,700 was the risk.
Hold up, wait a minute, something ain't right.
And this is where things begin to get fuzzy, because in one sense, he's correct. I did have to use $6,700 of my own money. So that is the risk. That is true. Kind of. And the kind of depends on what? Well, it depends on, are you managing that risk? Do you have risk management in place? Because if you do have management in place, you're going to make it where, yeah, you're putting $6,700 into the trade, but it's not like you're willing to lose $6,700. And to quickly visually represent this, so there is our money. This could be a stock, this could be crypto, this could be Forex, this could be futures, this could be options, but you have some sort of money. And in this situation, the money, which is technically at risk, was $6,700. So that is true. But in order for this risk to actually happen, well, then what direction would things need to go? Well, that would imply that I am holding and hoping.
That's a terrible idea.
And then the thing drops all the way down to being worth, well, zero. Or in other words, that would be worthless. So if that was my plan, you know what? I'm putting $6,700 in, and it better go my way because I'm going to have strong hands, and it's either it works in my favor or I'm going to hold and hope with the threat that it goes to zero. Well, then yes, that is true. My risk is $6,700. But if I'm sitting there saying, no, I want to do trading for a long time. I want to protect my capital. Well, that's why I'm going to manage the risk. And that is where kind of the irony comes in. Literally, the reason for the management is so that that $6,700 risk is not an actual risk, because you're going to cut the trade, cut the loss, whatever terminology you want to use, you're going to cut the loss way before you're ever down $6,700. Now, at what point do you cut it? After $100, $500, $1,000? That's where you get into your own personal strategies and rules. But that doesn't take away from the fact that from an umbrella standpoint, well, that's all management. You are managing that risk. So that risk is not ultimately boiling down to, well, what amount did you put into the trade? So hopefully that makes sense. Yes, when we look at the word risk, that is true. $6,700 was at risk. But the reason why it's not at risk, which can sound like an oxymoron, wait, you just said that was a risk and now you're saying it's not, is because why? Well, hopefully you're saying, well, when you put in that second word of management, that is what's making it okay. It could be $6,700, but because I'm going to manage that risk, it's not going to actually be $6,700. And then real quick before this, well, what happens if yes, you're right. In some sort of situation, maybe we get attacked by aliens and we're just not able to sell quick enough and it drops to zero. So yes, at that point, you're not going to be able to manage your risk. But assuming that doesn't happen, in the vast majority of cases, you will be able to manage risk, which is why risk management is so important. Because if you show up and say, well, I'm putting in $6,700 and that's it, I'm either going to make some money or I'm going to lose $6,700. Yeah, that's just flat out gambling. There's no management of the risk, which is the name of the game. Trading is not about making money. It's about managing risk. So before you go out there and look at, my trades or somebody else's trades, like, wow, I can't believe they put in XYZ into that trade. That's a lot of money that they're risking. Hopefully you now realize, wait a second, well, no, not really, because I'm going to assume they're also managing that risk. So I hope this helps. If you have any questions or anything like that, leave those down below. As always, if you're not a subscriber, make sure you hit that subscribe button. And if you're not, if you have not turned on the notification bell, do that too. So yes, this would be the foundation of risk management and why risk management is so important. First off, thanks so much for watching the entire video. Real quick, before you go, I want to invite you to a live webinar, web class, training, workshop, online event, whatever you want to call it, but it will be me live revealing to you what I've discovered that has allowed me to transform myself from being an employee to being my own boss, including how I had only one losing day out of 73 days in total. I'm going to cover 3 keys that have helped me unlock profitable consistency within the markets. The first key is super weird, but in a productive type of way. The second key is super awesome because it quite literally is wired into our DNA as humans, making it very easy to use. But in a cruel way, this becomes a pitfall for many traders. I'll explain it all though, including how to avoid the pitfall that it creates for some. And yeah, the third key, when you hear it, sounds way too good to be true, but it's not, and I'll show you how it all works. Then at the end, I open it up for a question and answer session that is, again, totally live. Even if you can't make the live session, please still sign up as it will be recorded, and you can go back and watch the replay that I will send you. Click the image on the screen or click the link down in the description box so you can get the date and time and claim your spot, which I should note is limited due to the fact that this truly is a live event. If you have any questions, let me know. If not, I'll be seeing you soon.